So the Fed decided to cut rates once again, proving that they want to focus on the economy over inflation.
Yeah, well, we knew it was going to happen. It was like an 87% happening, right? And here we are, once again, 0.25.
Well, the biggest thing with this is the fact that they are focusing on the economy and they are ignoring inflation, because the inflation data came out last month and it was 3%. And everybody freaked out and said the Fed was not going to cut rates. And here we are. They decided to cut rates.
I know. So here's the thing. On the Fed's own website, it's 2%. That's what the Fed says that they want to hit. That's their goal. And it's been creeping up. And 3% is very, very interesting. That means that they don't care.
Well, and Powell even said, if when asked, when is inflation going to be back down to 2%? And he won't get a straightforward answer
I know,
to that.
Of course, because he keeps saying it's transitory.
Yeah. Well, I think he said it's transitioning now.
Well, yeah, I know. He's got a new marketing angle. It's all marketing. But the reality is 3% inflation is something to watch, because it's been creeping up, albeit 1 percentage point. I get it, but it's still going up. Going up is not good. It's supposed to go down.
Well, and people might say, okay, 2 to 3, is that really that big of a deal?
Yes.
2% to 3%.
No, it's 33%. That's what that is.
Well, it's more than 33%.
Well, 2 to 3% is 33%.
Oh, I see what you're saying. Yeah,
but
exactly.
Yeah, that's a huge difference from, so said another way, if I'm the Fed chair and my goal's 2, I'm 33% off of my goal.
Well, and 33% off and lowering rates so that inflation may go up higher.
That's the thing. Let's talk about what the quarter point will do, because we're already seeing a jump in mortgage applications.
Yeah, mortgage applications at the highest point they've been since 2023 last week. And it's because I believe it's the sentiment, right? People realize that rates are going down. It's motivating them to buy. We have a lot of buyers on the sidelines that want to buy a home. The affordability, of course, is still an issue, but the other issue is rates are so high, they're not coming down. Well, now rates are coming down, and, it's pushing buyers out.
Well, we knew Trump would win this fight. Like, you know what I mean? He's going to keep pushing. By the way, he still thinks it's too high.
Oh,
but
yeah. No, he wants them way lower.
We both know what happens when rates go low. When money's cheap, people use it to finance stuff. That's the way you need to look at it. And I'm okay with rates right now. I think prices need to come down.
Yeah, but will they?
But that's what I want. I mean,
that's what everyone wants.
I in my history of buying real estate, I'm talking about back from the late 80s. I'm telling you that this number we're at right now, 5-6%, that's about right.
Yeah, we're at about 6.2% right now.
Historically, this is not a bad rate.
No, it's not. And, for those that are, thinking that prices will come down, we're just not really seeing that in the markets right now. And in fact, the markets are getting busier with all these mortgage applications and buyers coming off of the sideline. And, but also, if they're going to not focus on inflation, you have to understand that inflation is going to, even if inflation stays at 3%, that erodes your purchasing power by 33%, additional a year.
Yeah. And I think the one thing, too, that business is getting harder, inflation is crushing business owners. AI is helping a little bit, but only if you're a business owner. Obviously, if you're an employee that knows AI, and I've met a bunch of these folks, they're crushing it. There's like this new economy is emerging right now with people that are using AI and tech. But here's the point. Wage growth is not going to be a thing next year. So what you've got is 3% at least inflation. And I don't think we're going to see a huge wage growth, because what's happening is employers, when a position leaves, they're taking a look. Can I absorb this in my team? Can I use AI to make my team more efficient? Not necessarily cutting people, but natural attrition. They're looking at AI, and they're looking at their businesses very differently. They're saying, can I grow my business without growing my staff, without growing my overhead? And how can I do that using AI? And so that is prudent. That's what's happening. And what that's going to do, it's going to attack wage growth. I'm going out on a limb right now, and I'm going to say that wage growth is going to be the lowest on record in years in 2026.
Yeah, and that is going to be, tough for people to absorb. The other thing is going to be how far are rates going to go down? Trump gets his person in May, we're getting closer and closer to May. Obviously, he wants lower rates. And for those saying that, the rate is determined on the bond market, yes, but we're seeing rates go down as the Fed has been lowering rates. So it is happening. Rates right now, before this lower, were about 6.2%. So it'll be interesting to see where they are after that and if we do get below 6.
Right. Well, all you have to do is look at this administration wants people to have low rates, right? And of course, they're supposed to be independent, right? They're supposed to be independent, but there's going to be significant pressure on to drive those down. So this is going to be the year. The interesting piece is going to be the middle class is going to get squeezed. You're not going to see. In my opinion, you're not going to see the wage growth like we've seen. And, there's going to be an abundance of people. Unemployment's projected to go up next year to almost 4.7. In many, many studies, they say 4.7. That's a fairly big number. That's millions of people. Now, and everybody assumes that this is like lower end jobs. Right? Do not assume that, because I dug into this. It's not. Of course, some of that is, but it's not. This AI movement, the efficiency movement, is hitting CPAs. It's hitting attorneys. It's hitting doctors. It's even hitting. I sent an email over to my friend who's a chef, a very, very, very good chef at an incredible restaurant in town called the Global Ambassador. He's the executive chef, and I sent him an article that said they're using an AI chef in Dubai, and it's actually winning awards. And so AI is moving in.
So, and the biggest thing I think with people is to really be focusing on these rates. If rates do dip into the 5s, I do think that that's going to spur buyers even more, just because the notion of rates are now in the 5s, not in the 6s anymore.
Sure.
So
and refinances.
Yep, and some refinances as well. So just be ready for that. I think that that's coming. I do think that rates will continue to go down, and we will keep you guys posted.